Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today we have Chris Stott from Wilson Asset Management and Simon Bonouvrie from Cadence Capital. Welcome, gentlemen. Today we're talking stocks that can make you money as the US dollar gets stronger and the Australian dollar gets weaker, which has been the case recently. One of these stocks, Chris, is the great Australian property company Westfield. How do you view it?
Look, I think Westfield's a buy, Matthew, for those yield investors out there. A good thematic over the longer term, more of a shift towards those A-grade malls away from B and C-grade malls, good US dollar exposure, so stock looks a buy to us.
Buy. Simon, got a contrary view?
No, I'd say it's a buy. It's trading on about 20 times earnings. It's got a yield of about 4%. High leverage to US consumer, predominantly US dollar earnings. I think it's going up.
Okay, let's get to a company that's not in property but is operational and geared to the US economy and the dollar, Brambles.
Brambles, I think I would actually, I think it's a hold. If I owned it, I wouldn't buy it. It's had flat earnings for the last 3 years, albeit they've spun out recall. I think they report in US dollars, and you'll probably find this year, because they've got earnings from all around the world, their earnings are flat again. And I think it's had a bit of a checkered history recently. I have it as a hold.
It's been disappointing over the last few years. Chris, have you got a view on it?
Stocks to sell, Matthew. Lack of earnings growth, the PE's trading right up there in terms of where it's been over its longer term history, and it could be a crowded trade in the sense that we've got a narrow market in Australia, a lot of Australian investors looking for companies with US dollar exposure, and that's right in the sweet spot for that, so sell.
Talking about stocks that have recently disappointed but have got really good US exposure is Computershare.
Computershare is a buy. With the profile for interest rates heading higher in the US, that's clearly a big positive for them. And also, you know, with the equity markets being buoyant right around the world, we're right in the mix of a raging bull market. That only is positive on the deal side of things for Computershare, so buy.
You concur, Simon?
I think it's a buy for two reasons. One, it's got high leverage to US dollar, and also US interest rates appreciating. So although it's had a checkered history, especially with acquisitions that have turned out to be suspect, I think at this point in time in the cycle it's a buy.
Okay, sticking with you and getting a bit of information out of you, favourite stock exposed to the US market, US dollar? Macquarie
Bank, as a disclosure, it's our #1 position in our fund. About 70% of their earnings come from offshore, and most of that's from the US. They're in an upgrade cycle at the moment. They're trading on about 15 times earnings. I think that the market's still undercooking their numbers and it's trending up. It's a buy.
Chris, what can we get out of you?
Austal Ships, which we also own at WAM, one of our biggest positions, around 80% of its earnings are from the US, with some clear catalysts coming up in the sense of maintenance contracts around the LCS program in the US, really strong management team, recommencement of dividends, good balance sheet. What has been historically a lumpy business has now got much more predictable revenue streams coming out in the next 5 or so years, so buy.
There you go, US dollar earnings, no guarantee for share prices, but some gems there.